Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. So as we go into a new week here, the big question is whether we are going to see the fourth vaccine Monday. So I'm sure you're aware the last 3 weeks in a row we have seen big vaccine news, the first of which was 3 weeks ago after the US election, where we saw Pfizer come out with results from their trial. Subsequently, we had the following week on the Monday Moderna, and last week we had AstraZeneca. Now, all of these news items have caused significant selling pressure to the downside on the metals at the beginning of the week. So we want to look out for that narrative as we go into a fresh week. And of course, what we saw last week as well was gold and silver prices break down in the lead up to that contract settlement that we discussed with you in detail on both gold and silver asset of the day, that you wanted to watch out during that thin liquidity, during options expiry, contract settlement as well on the Wednesday. It's very common to see traders and investors as they close out of that contract, as they move into cash, particularly in the USA in the lead up to Thanksgiving, and forced to do so off the back of the big sell-offs that you get on the metals. This can have exaggerated moves in the markets. And of course, on Friday, we did see that exaggerated sell-off, a break back below 1800 for gold, silver prices breaking below $23 per ounce. And the question now, of course, going into next week is whether this is just a temporary sell-off, if you see a slingshot move higher going into next week, or are we going to see more downside, whether the lows are now in for gold and silver, following on from the usual liquidation that you get into the lead up of Thanksgiving. If you go back and look at previous years, very often you do see support, fresh buying come back in at the start of the new month as we go into December. So with that, let's actually just go over to the charts. We'll talk you through exactly what we're looking at here as we go into a new week. So first of all, we have seen pressure to the downside, not only with gold and silver in the latest week, but also on the dollar index. And this has benefited metals such as copper, palladium, and platinum. And of course, we discussed platinum with you last week, which so far this month is up 13%. We banked more profits on that just last week, 500 points. And we've continued to see support come in here on palladium as well. So palladium basically in the last week is up 4% to the upside. So the running position that we have on this market right now is up just over 5,000 points over 2 trades. And what we've seen here on platinum is platinum at 2-month highs, catching a bid due to the usage in biotechnology. So each time we've seen positive vaccine news, it's lifted platinum and palladium prices higher. We've seen that, of course, have a positive effect on crude oil prices, to hitting that $43 per barrel level we discussed with you on last week's week ahead commodity report. So what we want to observe here going into next week is the probable scenarios here. So let's just start off with platinum. So platinum at the moment, if you look at it on the higher time frame, such as the weekly chart here, you'll see where we're tapping 2-month highs at the moment. So we have broken out of this continuation pattern at the moment, bull flag essentially on the weekly chart, and it's making its way back towards the 970, 980 zone. And of course, overhead would be $1,000 per ounce. So you remember a couple of weeks ago, we talked to you about the gold to platinum ratio, where platinum prices, they needed to get back to half the price of gold. If they did that, they would be trading at $950 per ounce. At that point, platinum was all the way down here. We had our position on at $873 per ounce. We have seen a really significant rally over this month. In fact, now into the close on Friday, being that it's sitting near 2-month highs, it's up 14.5%. So that's been a really solid move there on platinum. I want to look out for going into next week whether you'll continue to see platinum potentially lead the metals higher. If platinum is able to break above the 10-month highs, if it breaks above those levels and you break above the weeklies here, and we start to see a move back to $980, $1,000 per ounce, typically that will have positive impact on the gold miners and can also help gold and silver. Then if we have a look at GDX, so with the gold miners here, we did see a gap lower on Wednesday. So again, the normal contract settlement, we saw the price action liquidate in the lead up to that. Have that in mind for next year as well. In the lead up to Thanksgiving, when you have contract settlement, it's very common to see traders moving into cash ahead of that news item, ahead of the contract expiry. We had the options expiry on Tuesday, then the contract settlement on Wednesday, and it's often the case that you see liquidation in the metals in the lead up to that. We saw that in September. We saw that again last week. So with that pressure to the downside, we have now seen a couple of days here on GDX starting to settle around the 33 level. You'll see here where we've got a reversal on the Friday. It's up 0.5% on the day. So what we want to observe is whether the GDX is going to be able to get some degree of support going into next week, because certainly last year, back in November through to December, GDX was the first to break out, and then gold and silver followed afterwards. So of course we've seen these big sell-offs on gold, silver and gold miners over the last week here, but now we want to watch out for whether GDX is going to start to base here or whether it's got more downside pressure to come. Then if we move over here and have a look at gold, and then we have a look at silver as well, very similar event. So around the contract expiry again for September, this is where you saw a liquidation to the downside for 3 days in a row here for gold, dropping 1,000 points. So again, in the lead up to the contract settlement that we had last week on Wednesday, which was just before Thanksgiving, we've had another 1,000-point move. However, what happened afterwards was that we did get supported, then we saw an 800-point rally to the upside. So of course, what we want to observe into next week, being that we're going to be transitioning into a fresh month, the potential for fresh capital to come into the markets at the beginning of December as well. We've got a few news items to keep an eye on going into next week. One of those, of course, being Friday's non-farm payroll data. You want to be very nimble in the markets as always, but look out to see if we will get fresh capital to come into the markets, because we've continued to see over the last 3 weeks since that breakout up to 1965, where we subsequently saw that sell-off on the Pfizer news, and then the subsequent news the next week on Moderna, and then last week on AstraZeneca, and then the flush out in the lead up to contract settlement. This could be where we start to get a bit of consolidation to a bounce. Now, I can't rule out that we could get another vaccine narrative on Monday, and hence we could get another rollover back towards liquidity here. However, if we don't see that, it's quite possible as well that we may have the low in, and if we start to see gold get immediately bid off the Sunday open into Monday, then into Tuesday and so forth, then you could look out for fresh capital to potentially come in the first week of December, and then a reversal, which would lead into essentially a bull flag formation, falling wedge, and then you could potentially start to pick up momentum to the upside for gold. So I'm keeping an eye on the price structure, of course, going into next week there. And again, moving over to silver, similar. Now, silver hasn't broken down to the same magnitude that gold has. Silver's still getting supported around the 22.50 to 23 zone. You know, of course, that Goldman Sachs, the level that they put out to their clients, the buying level was $24 per ounce. So essentially that buy alert is in drawdown at the moment, with the price down at 22.68. They will be losing money on their $24 per ounce buy alert to their clients. So just have that on the radar there. So what I want to see is whether we will see again fresh buying evidence come in next week, whether either if we start to build up momentum going to next week, being the first week of December, fresh capital coming in the market, see if we start to get any sort of traction from this support zone around 22.30 to about the 23 zone, see if it's able to find support there, consolidate and potentially break out to the upside, or whether it needs to come down and retest the levels here back in mid-September. And of course, if we do get more vaccine narratives, another vaccine Monday, that's where it could put pressure to the downside, or the selling has all been done, or the selling is now complete with the pressure that we had on contract settlement last week, and then therefore we could start to be looking for a slingshot move as we then go into December. Now, what's also been interesting lately is leading into each of these sell-offs that we've had over the last 3 weeks at the beginning of the week. Typically, gold price action as you've headed into the Monday has tended to be, it's bullish. It's been bullish into the Friday close, and then subsequently you've seen the sell-off to the downside. So you see a retracement higher. So let me just show you this. So going back to after the US election on into the close there on the Friday, you saw bullish price action, and then the price got taken down. And then again the following week, you saw bullish price action into the Friday close, and then the rollover and the sell-off the following week. And then last week again, you had some bullish price action into the close and then the sell-off. However, the opposite has occurred into the close on Friday, where you've actually got a sell-off into the close instead of a bullish close, which would suggest that you may see the counter move. So typically, if gold has had a strong move into the close on Friday, it can be liable to have a sell-off into the Monday. However, if gold tanks on the Friday, which happens sometimes on non-farm payroll, you get a big sell-off into the close on Friday, quite often it can see the opposite move and it can springboard higher onto the Monday. It interrupts the usual counter flows that you can get. So I'll just put that on your radar so that you're aware of it. So again, the summary there is if gold tanks on a Friday, quite often you can see a bounce on the Monday through to Wednesday. So I'm looking out for that. And of course, Tuesday next week will be a fresh month, 1st of December. You can see fresh capital come into the market. The question is whether we're going to see another vaccine headline news item dropped on the market on Monday, which in that case, yes, that can cause more pressure to the downside for the metals, which you want to keep an eye on that. Now, again, going back to Palladium, as you know, we've discussed this multiple times. Palladium has been able to benefit off the back of a weak dollar in the last week. So of course as platinum. Palladium is looking really solid here for us going into next week, up 5,000 points on this trade at the moment. So this is looking over 2 positions. That looks really good. And what I'm looking at for Palladium, ideally you can see it consolidated all of last week. It broke out on Thursday and Friday. I'm looking to see if we can get a retest back towards the swing highs here, which would be of course another 1,000-point move to the upside, which would be perfect if we come back towards that 2,500 level. So we've got our positions there on Palladium. They're moving really solid as we go into next week. We want to see if we're going to get any additional follow through on that market. And then also moving over to crude oil. So we discussed with you last week on the week ahead commodity report. The expectation was that we were going to move up towards $43 per barrel here. We actually came up, tested that level, and even broke out further than that in the last week. Crude oil prices are up 7%, and they've had a huge move off the back of the vaccine narratives here as well. So essentially over the month of November, crude oil prices are up 27%. So we've seen a huge move there. And of course, next week we have the OPEC meeting as well. So we essentially have back-to-back trading opportunities now between now and the end of the year. So going into next week, we have, of course, non-farm payrolls on the Friday. The following week, we have the European Central Bank announcement. The following week after that, we have the FOMC statement. There are some very clear cycles at this time of year that you definitely don't want to miss out on. The window of opportunity is closing for this. You can see some of the big moves that we've already had on the metals here, where you've got Palladium had a big breakout in the last week. Oil prices, as you can see, 27% up this month so far. Platinum, which we banked last week, is up 14.5% in just a month here. And where you're at with gold and silver prices at the moment, when you finally do get that slingshot move, but your timing is very important. This could offer some huge trading opportunities between now and the end of the year. Then moving into Q1 of 2021 that you absolutely do not want to be missing out on. So of course, if you would like to find out more, learn a research-driven approach to the market where you're going to be utilizing our data, market intelligence, have awareness of capital flows. I've gone through that in detail with you today in the lead up to the contract settlement, exactly the sort of price action that you normally get at this time of year, the liquidation on the metals, and then we want to look out for fresh capital flows going into next week. It's important that you're aware of the macroeconomic data, that you're aware of key liquidity zones, what the hedge funds and the money managers are doing in the market. You line that up with all the intermarket correlations and of course very specific seasonal cycles that we get at this time of year as well. That will help you massively to get an edge. So if you would like to find out more, join a community of successful traders and join the live trading room mentorship program. There is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You have access to our real-time trade ideas, institutional research and market intelligence, access to our private members academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will of course get in touch with you ASAP. And do make sure you subscribe to our YouTube channel. That way you're always kept updated with all of the latest commodity reports.